This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The biggest oil traders and energy hedge funds speaking at the FT Commodities Global Summit struck a bullish tone despite banking jitters, and see a jump in oil prices by the year-end. Pierre Anjurand, founder of hedge fund Anjurand Capital, was the most bullish and saw a potential Brent oil price of $140 a barrel by the end of the year. He said the current oil price downturn was speculative and not based on fundamentals. Oil prices rose for a second day on Tuesday after slumping to 15-month lows as a crisis at Switzerland's second biggest bank, Credit Suisse, which followed the collapse of two U.S. lenders, led to a takeover by bigger Swiss rival UBS.
Oil fell in Asian trade on Wednesday morning, pairing 2 straight days of gains after an industry report showed U.S. crude inventories rose unexpectedly last week in a sign fuel demand may be weakening. Brent futures, which have risen more than 3% this week, were down 37 cents, or 0.5%, at $74.95 a barrel at 0400 GMT. U.S. West Texas Intermediate, WTI, crude futures were down 39 cents, or 0.6%, at $69.28. Data from the American Petroleum Institute on Tuesday showed U.S. crude inventories rose by about 3.3 million barrels in the week ended March 17, sources said.
Moving on to the top news in the energy sector.
Container flows fell further in January and February compared with the same months a year earlier, showing the inventory liquidation cycle was not over yet. Singapore's seaborne container shipments were down 6% in February compared with a year earlier, one of the steepest falls since the first wave of the pandemic. Japan's air cargo through Narita Airport, used for higher value and more time-sensitive merchandise, was down 33% in January after a 24% year-on-year drop in December. London's Heathrow handled 6% less air cargo in January than a year earlier after moving 11% less in December.
U.S. crude oil, distillate and gasoline inventories were seen drawing down last week, an extended Reuters poll showed on Tuesday. 8 analysts polled by Reuters estimated on average that crude inventories fell by about 1.6 million barrels in the week to March 17. The poll was conducted ahead of reports from the American Petroleum Institute, an industry group, due at 4:30 p.m. Eastern Daylight Saving Time, 2030 GMT, on Tuesday, and the Energy Information Administration, the statistical arm of the U.S. Department of Energy, due at 10:30 a.m., 14:30 GMT, on Wednesday.
Next, we have the top news in metal markets.
Argentina's mining exports hit historic levels last year, the government said on Tuesday, powered by surging lithium income as the South American agricultural powerhouse targets profits from the metal key to meeting booming electric vehicle (EV) demand. Even as Latin America's third-largest economy suffers triple-digit inflation and the fallout of a devastating drought afflicting top farmland, lithium exports helped push up the country's mining exports to $3.86 billion last year, the highest level in a decade, according to Economy Ministry data. Argentina's lithium riches, like those in neighboring Chile, are extracted from brine in sprawling salt flats that use the power of the sun to concentrate the ultra-light metal in evaporation pools.
Copper prices were little changed on Wednesday amid cautious sentiment ahead of the U.S. Federal Reserve's interest rate decision, while being underpinned by firm market fundamentals. 3-month copper on the London Metal Exchange was unmoved at $8,759.50 a ton by 0432 GMT, having recovered this week from a 2-month low hit last Wednesday due to a large sell-off over a banking crisis, as regulators moved to rescue First Republic Bank and European lender Credit Suisse. The Fed began a 2-day meeting from Tuesday, and investors are divided about whether the central bank will raise interest rates by 25 basis points on Wednesday or place a pause on hikes for the month. We will now look at the top news in the agricultural sector. Chicago wheat futures hit a one-week low on Wednesday, weighed down by extension of a Black Sea export deal and improved weather in the U.S. winter crop growing regions. Soybeans eased while corn was largely unchanged. The most active wheat contract on the Chicago Board of Trade, CBOT, lost 0.7% to $6.78 minus 3/4 a bushel, as of 0355 GMT. The market dropped to its lowest since March 13 at $6.74 a bushel earlier in the session. Soybeans fell 0.2% to $14.63 minus 3/4 a bushel, and corn was unmoved at $6.30 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.